Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as how the day is going to be panning out in terms of stock markets. This is the first trading session of March as a month, but we've already seen the beginning of the March series as of Friday. That was actually on a very weak note. The last week was a truncated one, but even a 4-day week did lead to a loss of 20 lakh crore rupees in investors' wealth. And the month of February as well concluded on a painful note on Friday, as well as the start of the March F&O series. Remember, with the 22,500 now gone convincingly post Friday's drop, the focus has now shifted to even lower levels. Whether 21,000, 22,000 is something that we are actually looking at on the downside, and where exactly will the bottom be found as far as the Nifty is concerned. As of today, we actually have some positive cues coming in from the global cues. When we look at the US markets, they shut shop on a stronger note, and that's despite all the concerns on geopolitics, the conversation between Donald Trump and Zelensky that really led to some kind of an understanding that the peace between Russia and Ukraine might not also be seen too very soon. But of course, what will be also important from the US to watch out for is tomorrow is when the tariffs kickstart for Mexico, Canada, and additional tariffs for China as well from the US. So tariff tantrum will also be continued to be watched out for in this new week. Apart from that, we will also see the markets reacting to our GDP numbers, which came in line by about 6.2% as of Friday evening. So the markets will be reacting to that. Auto sales numbers will be important to watch out for. As far as the Asian markets are concerned, following the US markets, what we've seen is that most of the Asian markets were also up this morning, and the Gift Nifty is also indicating to a gap up start. The big question will be whether the gap up will actually sustain or not, given the kind of extreme sell-off that we have been witnessing in the markets. So we will be focusing on all of this. Let's welcome our guest on the board. We have Mr. Vineet Bolinchkar, Head of Research at Ventura Securities, joining right in. Warm welcome to you, Vineet, and thank you so much for taking the time out. Another week, but we have a painful backdrop to really look at, and of course the uncertainties of what will really come in terms of tariffs from the US as well. First up, I just want to get an understanding of how are you looking at the markets, just purely looking at the levels as to what has transpired last week. We were thinking that a bounce back will probably happen on 22,800. That did not happen. 22,500 also was given up as well in the markets as well. Now looking at those crucial levels also being tested. Earlier we were only thinking that it's the broader markets that are in the risk of entering a bear market. Now with Nifty also just 4% away, how exactly are you really looking at the market setup? Is calling a bottom too soon even now?
I think calling a bottom too soon, even now, is the way to go. The markets look oversold. There could be the possibility of a rally, but
Okay.
the geopolitics is at such a juncture that things could melt down further from here because of the warmongering that the EU is doing along with Zelensky, and new dynamics that are coming up where the US is absolutely hell-bent on avoiding war at any cost and scaling back on expenditure, wasteful or fraudulent or whatever you call it. So in that kind of a situation, I think you know there is a possibility of a rally that can come off, but I would want to wait on it, because what, when you're cutting back on expenditure in the US, the way they are thinking of doing it, calling
Yeah.
back the wasteful expenditure, etc., you're also going to be minusing the GDP to that extent. Third thing is, when you impose tariffs and you want to start production in your country,
Yeah.
uh, you need to match the cost of uh, products landed in the US, okay, uh, sold by China. Is it possible for the US to do it? Well, I think with the present cost structure, etc., it's not possible. And we are going to have a situation of stagflation coming out in the US.
Okay.
And what is happening is that the flows will continue to move away from India, given the fact that you're seeing three large economies play out positively. So there is hope of development in the US, so funds are moving out. uh, manufacturing. There is hope of if the war coming to end, Europe doing well because it's a new beginning for Europe after 3 years, and China has seen a lot of stimulus coming there, and AI has also become very prominent the way they've displayed it. So there's a lot of money flowing out of India, and while the valuations have come to around 18 times on the Nifty, I think which are very, very good levels, which are very close to uh, 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 10-year averages, if I may say. Uh, just a few points here and there. I think it definitely is a market in which you should be nibbling the market, but given the present circumstances, there is a possibility that after a dead cat bounce, the markets can further sell off, and it is in that fall that I would be looking to nibble into the market and maybe add slowly.
Fair point. We will actually come to you to understand where exactly would you be looking to add on fresh money at this point in time when the markets give you that opportunity. Markets have started to tick in the pre-open trade and we are very close to 22,000, 114 points lower. I hope this improves for the better, but this looks like 22,000 is at the risk of getting dipped right in the pre-open as well. 0.4% of a loss. There is some uptake, so we are going to be looking at this volatility settle down by about 907, 908, and then we will probably get a better understanding of how we could be opening in trade today. But again, it looks like it could be a weak start for the Indian markets despite the Gift Nifty indicating to a positive start looking at the pre-open trades. Let's actually look at the first point. You did say that it could be too soon to call a bottom at this point in time. I wanted to get a sense of, are there any indicators that you're looking at which could probably tell that the signs of reversal are now firmly in place? What could those indicators be?
So one positive is that your GDP is 6.2, and on a larger base. So we saw the government revised the GDP to 9.4.
Hmm.
Q4 GDP could be a dampener because of the revision. So on a mathematical basis, it would be slightly lower. And if it is more or less in line with what we are doing just fine. Uh, Other things that I would be looking for is the traction that we are seeing in terms of the rate cut that comes in April. That is going to be very important. And this month of March is exactly where the tax harvesting happens. So
Yes.
you are going to get a lot of skewed prices, and when they come off, that is where you start nibbling into it. So when I said I would be buying into this dip, so this is another point which I did not tell you earlier, is that the tax harvesting can bring the broader market down even further. So
Okay.
what I would be definitely looking for is some of these factors while going into the markets.
So where exactly would you be looking at the first instance when that dip really comes in and you find attractive valuations across sectors or stocks?
So sectors which I would be looking at is going to be banking.
Okay.
There is a lot of value out there. Large number of banks, especially the PSUs, are available at below book.
Hmm.
Uh, Private banks, Kotak, we like financial behemoth, Bajaj Finance. I think its time has come. It's a
Hmm.
proxy play on the government's thrust towards consumption.
Okay.
Uh, the other things that we like is going to be the uh, pack of stocks in the commodity space, Hindalco, Grasim to a certain extent. Within the paint sector, we like Berger Paints. So, there's a lot which is going to be pro consumption and pro commodities, because commodities will take off if we have an inflationary kind of environment.
Okay, fair point. Let's also discuss the auto space, sir, since that's something that will be in focus today. Across the board, we have seen numbers coming in. Again, a mixed set of numbers is what we have already got from four-wheelers and two-wheelers this time around. For passenger vehicles in M&M, there's been an uptick of 19 odd percent, but Maruti has posted slightly below estimates at 1.99 lakhs in total sales. Eicher Motors has seen Royal Enfield sales at 90,670 units. Total sales are up by 19%, but Tata Motors has actually reported an 8% year-on-year decline in its domestic and international sales as well. Hero Moto, again, February sales have slipped 20% on a year-on-year basis too. So how are you really looking at this mixed bag of data? What does it tell you in the auto space?
One stock that we haven't looked at is the recently listed Hyundai. So where
Yes.
the numbers are not that attractive, but I think say their exports are going to be a little savior for them. Uh, Eicher Motors definitely is one of the stocks which is really holding out, but valuations are rich out there. I'm going to go with Bajaj Auto out here,
Okay.
and completely because Bajaj Auto and Hyundai and Maruti look fairly attractive in terms of valuations. Uh, Bajaj Auto and Hyundai because uh, the thrust on the EV is going to be huge when Tesla gets launched in India. You know, it's
Yeah.
going to be an aspirational value to have a good electric car, and
Yes.
in that I think these stocks can do well. Uh, you know, it was very interesting that in a con call with a company which does high, uh, uh, car rentals, they're
Hmm.
not buying the uh, Tata portfolio
Okay.
because actually it is a EV mounted on a regular ICE platform. So they're staying away from that. So if these guys are staying away from that, I think Tata Motors could still continue to be an underperformer.
Still continue to be an underperformer. How much more downside do you see for Tata Motors, Vineet?
Uh, Around 550 to 575 is where the stock is still going lower, I think.
550 to 570 is something that could actually come in. Let's welcome Vaishali also on board. Vaishali Parekh joins in, Vice President Technical Research and Analysis at Prabhudas Lilladher. Warm welcome to you, Vaishali. Good to have you with us as well. Tell us, last week has been pretty terrible for the markets. As we begin this March week as well, what's the sense that you're getting? Now, as we speak, the pre-open trades are slightly better off than the just opening tick, 20 to 187 now. So it's now reflecting something what Gift Nifty was pointing out to. Are we in for some reversal? Even if it is short-lived, are we in for some reversal today and for this week?
Very good morning, Sakshi and gentlemen there. I think, yes, we've seen too much of pessimism. And if you see, Nifty has already from its peak corrected by 15%. So technically, we were looking at 21,800 levels as support. So we are pretty much there. So bounce back can be a possibility. Today also, the Gift Nifty is indicating a positive start. But, we may see some whipsaws. Market can oscillate, so for now, I would look at 21,800 as support and maybe 22,300, 22,500 as a bounce back. And having said that, I think right now, not with a trading perspective, but if you see the Nifty 50 stocks, many of them have come to a fair value. So I think one can start nibbling on those.
Okay. Any key stocks, Vaishali, that you're looking at for today that investors can keep an eye out on?
So, Sakshi, we spoke about capital goods like
Yeah.
ABB, Siemens. So, weekly chart, I think the worst is over, according to me.
Okay.
Then there are a few stocks which are, in spite of market choppiness, showing good strength. So, to name them, Shriram Finance, the financials are showing strength. the that sector. And Indigo, if you see individually, I mean that is also looking good. SRF is in a good uptrend. So these are the stocks for trading perspective. But as I said, capital goods, then there is NCC, then maybe Ultratech Cement at these levels one can consider, because that too saw a massive correction last week. So yes, I think one can start cherry picking for a longer term horizon.
Okay, got that. Another thing that I wanted to discuss with Vineet also is what you also pointed out initially, the foreign outflows that continue unabated. Even on Friday, there was like a massive 11,200 odd crore rupees of a sell-off there. No signs of reversal yet. How much more pain do you think will the markets be able to digest with this continuation of FI pulling out the money, Vineet?
So, it's anybody's guess. As I pointed out earlier, that on a risk adjusted, currency adjusted basis, if the returns are going to be around 4 to 5%, and my US economy is, on the thrust of revival in terms of manufacturing, uh, Europe is going to come out of a war kind of scenario. And on the other hand, we have China, which has got huge stimulus. We are competing against a lot of positive triggers where we don't have any. So, arbitrage money will continue to get pulled out.
Okay, fair point. Let's also look at Vaishali, one more stuff, and that's the broader markets, particularly 21% down for the mid caps from peak, 24% down for the small caps from peak. How much more downside do you see for this pocket? Some more pain to be felt even now?
Well, it's very hard to tell because still we see no sign of reversal. Only consolation is that it's in the deep oversold right now. Even when I'm looking at the weekly, so if I'm looking at the weekly chart, it is currently at a 100-day moving average at around 47,000 levels. So this is the level to, I'm talking about mid cap. So that is what one can have a look at, and well, we can see a bounce from here.
Okay, okay, fair point. Let's also discuss some more particular points as well. Vineet, I also wanted to get a sense. Last week, there was this big theme that unfolded, Ultratech Cement's entry into cables and wires, and that shook a lot of stocks there. I think Polycab was down, what, 20% in just 1 or 2 days. Many of the stocks continued to reel under pressure. Today, there is some bounce on Ultratech. There is a brokerage house report also from Morgan Stanley with an overweight rating on Ultratech and a target price of 13,650. But how are you looking at engaging this scenario again? A large player like Ultratech, will that be able to disrupt completely what these current leaders have been able to make for themselves in terms of market share, as well as their own USPs in this space? Or do you think it will still take a lot of time and one can continue to hold on the Havels and Polycabs of the world?
See, I believe that the market growth is very positive for the sector. And an element that people don't look at is that exports is a very big market. In terms of production pricing, we are extremely cheap as far as the market is concerned out there. So I think there is a veritable export opportunity that is available for the players, and they should be looking at it. In fact, I had been talking to a lot of companies and asking them why are they not expanding their portfolio of growth. So they pointed out to the fact that from 1% revenue share, they've now gone to 10% revenue share over a period of time. And since the domestic demand is so buoyant, they have not really bothered to focus on exports. But having said that, the exports is a market which these players can explore. And while the valuations were rich, and this entry of Ultratech has made these valuations little more sane. I think that the market disruptions that take place will stabilize only when Havel has a reasonable share in the market. And unless they don't get a 15% kind of share in the market, considering the expansion that they're doing of about 1800 crores, is required for the market to stabilize. So just like we are seeing the market shares in paint stabilize, we need. It is early days yet to understand how the this stock will perform. But there are certain players like D-Day Plastics which should benefit from this market expansion because they're ancillary suppliers to this industry.
Right, okay. Well, Vaishali, what about you? How are you looking at both the cement space as well as this cables and wires segment as of now? Any stocks that you like technically?
I think Ultralex cement is pretty much close to its support level of 9,500. So
Hmm.
I think that keeping that in mind, one can consider this stock. And as far as cable wire stocks are concerned, I think Finolex, all these stocks have given a good substantial corrective move. So at least to start with, I mean, even there is an exhaustion as far as the selling is concerned. I'm talking about Finolex cables because I think this
Hmm.
would be a good buying opportunity. I don't think this would call for much of a downside from here on. However, one should keep a stop loss of around 780 and consider this stock.
Fair point. Okay, we are now very, very close to the market opening. The market Nifty has settled at 22,194 as of the pre-open trade. Let's see how those ticks get started. Most of the sectors also look to open into the green. What I will be looking at is how auto space will be looking at opening today. Remember, after those data points have come in and the sales figures have come in, consumer durables as well. Yes, we have the final ticks 22,211 for the Nifty at this point in time. So about a 0.4% of an uptick that you can see. When we look at the Nifty Bank, that's also opening about 0.4% higher, 48,542, almost a 200 point of an uptick. So it's a strong, decent start as far as the markets are concerned because we are 100 points up. Even on the sectoral front, autos are opening about 1.5% higher. So that's the top moving sectoral index today, right after those sales figures have come in, inching higher. IT pack also showing us some sign of relief now, almost a percent higher. Remember, this was a hard hit pocket last week, but almost a percent higher is what it is opening at. Even the broader markets, you look at the small caps that are opening about 0.6% higher in trade. The mid caps, although slightly lower, 0.1% up only. Pharma and FMCG are on the back foot. Slight losses that can be seen on these two sectors, but rest of them are still holding up in trade. Among the top stocks, you have Ultratech Cement that we've discussed, 4% higher, 10,526. A sharp momentum that is coming in right after those brokerage houses move that have come in. And you're also seeing M&M, again 3.3% uptick right after those sales figures have come in, and HSBC has a buy rating with a 3520 target on M&M. Aisha Motors also up by almost 3%. Grasim is something that was marked also by Vaishali and by Vineet, also 2% higher. Infosys, that's up by 1.7%. So within the IT pack, you have Infosys that's opening up. What's on the downside? You have IndusInd Bank still declining, Coal India reversing some of its gains, 1.3% lower. Bajaj Twins giving up some of their gains, Bajaj Finance and Finserv, NTPC, ONGC, these are the pockets within the Nifty that are opening lower in trade. The PSU stocks about 0.5% higher. What's up and about? PFC and REC both have got brokerage houses upgrades coming in. Outperform rating from CLSA as far as PFC and REC are concerned. They have been upgraded to high conviction picks. You can actually see a reaction on them. BHEL, NHPC, HAL also is pulling up in trade. You have Oil India, BPCL. So the oil and gas segment is also up and about. Within consumer durables and the F&O space, you have Voltas that's up and about. From the auto pack, it's TVS Motor. That's also pulling up in trade. Railway space, you have IRFC that's about 3% higher in the F&O space. But what's not doing well so far in the F&O space is PB Fintech, 197 Communication. Then you have Max Healthcare, Godrej Consumer and BSC also as a space that is lower in trade. Vaishali, coming to you, how do you find the opening at this point?
I think pretty decent, much to our anticipation that yes, a bounce back is possible. So we'll wait and watch, not in a hurry because market, I think the way it's moving, we will see some more choppiness coming in. But well, not in a hurry, but one should start. As I said, quite a few stocks, not a trader's market, but I would say for a long term perspective, we have seen good erosion, so start buying.
Okay, fair point. Let's get back to Vineet to understand, how is he looking at certain pockets then. I want to understand on the metal story particularly. Vineet, today there is an opening of over 1% high as far as the metals pack is concerned. You did say Hindalco was something that you are already looking at. The metal story has so far been extremely volatile and also vulnerable to any external tariff announcements that are being announced by Donald Trump. How are you navigating through the metal moves right now?
See, metals as a pack is a hyperinflation theme. Hyperinflation is going to play out in the global markets, particularly because the macros of countries are not that stable, and we are going to have, as I said, some kind of stagflation in the US, and euro, if it goes high on spendings, and if the tariffs kick in, then again, your economy slows, money supply is high, you need to support everybody, job creation, etc., etc. So there also it will flow. And China is also revving up stimulus. So I think the hyperinflation theme is going to play out, and that is good for metal as a pack. But here you have to be very careful that when you buy these stocks, you should be understand that spikes can be very large on either side.
Hmm. Okay. Vaishali, any key stocks that you're looking at opening?
Well, I still think, as I mentioned, the stocks that I recommended, SRF, then ABB, Siemens, they are stocks which I think will not go through a lot of whipsaws right now. So I'm looking at that. And also in the metal pack, I'm very closely looking at National Aluminium too. I think that is doing well. And as far as the financial is concerned, I'm looking at Shriram Finance.
Okay, fair point. Broader markets also, there's some interesting move that's coming in. Macro tech developers, that's up within the real estate pack. You also have stocks like ABB, as was marked by Vaishali, is also up and about today. You have BHEL that's buzzing. You have Adani stocks that are also up and about. Adani Green, Adani Energy, Adani Power, Ambuja Cements, all of them are up and about. Vineet, has anything changed with respect to your approach to Adani Group as of now? What are you constructively positive on, and where do you think there will be a long haul wait before the stocks continue to perform and give us good returns?
See, if things settle down in the Middle East
Hmm.
right now, it is about to erupt again.
Hmm.
But if things settle down in the Middle East, I think Adani ports as a long-term pick should be looked at very,
Yeah.
very, microscopically, because the the landing point in Europe, there are three ports which are of interest. One is in Italy, France, and Greece.
Yeah.
Greece port is the one which has got the deepest port out there. There is a Piraeus port, and very high chances that Adani gets to have some stake out there. So from Haifa to Pires, if you have Adani out there, then it's going to be very, very interesting. I think volume growth can pick up substantially in Adani on a long-term perspective, and that's what I would be looking at within the Adani
मैं
group of
मीडिया में
stocks.
हूँ।
Hmm, hmm, hmm. Okay, some volatility kicking in now. Private banks are lower in trade. Do you have seen some momentum loss? PSU bank slipping, Nifty bank overall slipping, small caps giving up gains, mid caps also turning red, and pharma. Some volatility definitely kicking in, but autos, metal, realty, these remain to be the top movers. Any top choices within the auto pack, Vaishali, for you?
Well, I think still in the auto pack, what I still like is Maruti,
Okay.
and the other one that I still like is Ashok Leyland. So
Hmm.
these two stocks still have some clarity as far as their trend is concerned,
Hmm.
but the others are still maybe it's a little bit of correction. I'm not too sure about Mahindra and Mahindra also, because if market has to weaken further on, I think Mahindra and Mahindra can go towards 2300, and that would be the level that I look for a buying opportunity.
Okay, got that. So not immediately you'd rush for M&M at this point in time. Okay, Vineet, I also want to understand, with summers now nearly knocking the doors across North India, are you looking at consumer durables as a space? Are you looking at at those summer-related theme stocks also coming in today. Voltas is up and about, what, 5% in F&O. Anything interesting here that one can look at? Maybe cola companies, consumer durables, FMCG. How are you looking at this entire space?
So, rather than pick stocks in this, why don't we look at distribution companies out here?
Okay.
Aditya Vision and uh, uh, EMS look very good in terms of doing well from this space.
Okay, that's interesting. Vaishali, how about you? What would you prefer in summers, your summer favorite stocks?
I think I would look at Voltas right now because
Okay.
Voltas is showing some signs of reversal, but I think it can retrace from here on. So Voltas is one of the stocks to monitor.
Fair point. So, summer related theme is something that we will continue to discuss all across now March and April, and that will be interesting to watch too. 10 minutes out, we are at 22,182, stabilizing somewhere about 60 points higher in trade. Even though the India VIX is about 1% higher, and at least the banks are, starting to decline a bit at this point in time. Also wanted to get a sense, Vineet, as far as the IT pack is concerned, how are you approaching the big large cap IT names vis-a-vis the mid caps as well? Last week, this has been a space which has been a rather big drag on the market sentiments too.
So, if you see the way the gold card is positioned in the US
Yeah.
for the EP5, what you are saying is that you want to come to the US, you pay me $5 million, and I
Yes.
don't care whether the client pays 5 million or his sponsor company pays $5 million.
Hmm.
Where does the H1B visa stand in this? I think there's going to be a pushback on that, and that is going to impact these companies very badly.
Hmm.
And one more thing, which is now a front-ended short-term risk, is the dollar, which is now kind of declining. So pharma and IT packs are going to face this brunt,
Hmm.
and there is a chance. So although the market is expecting a depreciation of the Indian rupee,
Yeah.
you know my sense is that in the short term the dollar index may strengthen, but the kind of things that are coming out in the US economy, I don't think that the dollar can strengthen. I believe that the dollar will weaken significantly. And even if the rupee dollar equation goes back to 82, 83, which it was earlier, we
Yeah.
will see significant haircuts come on the valuations of IT stocks. And we've seen that happen over the last week.
Okay, that's an important point that you make right there. But if I have to ask you, Vineet, would you give $5 million to get a US citizenship?
If I had $5 million, I'd be investing in the Indian markets.
It's a lovely answer. What about you, Vaishali?
Well, I would also, I think it's a, opportunity to look into these stocks. So yes, my focus would be still on Indian market.
That's an extremely positive and optimistic move as far as Indian markets and the India growth story is concerned. Well, Mr. Donald Trump can keep his America dream to all those people who really have the money and who want to live that dream. But Indian people, I think, India is the place to be. Next 1 or 2 decades, we are going to be bouncing back strong growth, and we are going to be really looking as one of the best economies in the world, that one has to say. Okay, let's look at some of the other pockets then. Almost 10 minutes out as far as the markets go. Yes, pharma is down. We are now seeing some more dips come in. Actually, the market breadth is reducing a little bit. You do see the broader markets now slip. You see even FMCG slip in trade, and now you're also looking at financial services. So the Nifty bank is where the pain point is emerging. Vineet, you did say that banks and financials are giving you the comfort, and at this point in time, this is where you would look at. What do you think is the Nifty bank and the banking and financials waiting for as far as a reversal in trend is concerned? Why do you think they're not able to sustain the kind of move that we are seeing?
So it's more to do with the overall sentiment in the markets. I think the selling is very aggressive. FII, or institutional ownership of banking stocks is at about 25% of float, or even higher. So the appetite for banking stocks is not as much. So any kind of selling that happens is not being bought into. Uh, but what do the stress case valuation of banks, Indian banks, the PSU Indian banks, when they did not have any capital, and they were in that uh, corrective mode where they could not lend,
Yeah.
some time back. It used to be zero point 0.3, zero point 0.4, zero point 0.5 times book. You're getting these banks at zero point 0.7 book, and it's very, very cheap from a long term perspective. What can go wrong in the story, if you ask me, is that we have seen their growth patterns are pretty strong. They're about 10%, 10 to 12% AUM growth.
Yeah.
Their NPAs are best in class as of now. ROEs are on par or sometimes even higher than private banks. So the wild card out here would be, do we see a lot of loans get turning bad, the cycle turning bad, because we are
Okay.
seeing a lot of stress in the market.
Yeah.
And the government is also talking of having even higher capital adequacy requirements.
Hmm.
So I think these are the things kind of not helping the banking sector really uh, get out of their somber mode.
Fair point, understood. And that's a very valid point that you make at this point in time, and that makes for a lot of consideration here. But since you did talk about the growth, just before I let you go, on the earnings that have panned out for Q3, what was the biggest takeaway for you from this earning, and what do you anticipate for the upcoming quarter then, Vineet?
So I think the upcoming quarter is also going to see a lot of cuts in earnings,
Hmm.
and that is a key factor to watch out, because if you're going to see earnings cut come in, then what it means that the economic growth is flagging off.
Hmm.
So that is what would be watched very intently.
Fair point. Okay, Vineet, we'll thank you on that note and always appreciate your time and the clarity with which you explain to our viewers as to how to really look at it from the magnifying lens when it comes to certain pockets and what's really impacting each sector. Glad to have you with us week on weeks. Stay tuned with us on Business Today and keep coming back to guide all our viewers. Thank you so much for being with us. We'll continue our conversation, viewers, with Vaishali to do some stock spotting now. Within the broader markets, Vaishali, let's look at a few stocks that are actually doing well. You have Coffee Day Enterprises, interestingly, at a 20% circuit. You have Rana Sugars, that's 10% up. Imami Paper Mills is up in trade. You have SML Isuzu, that's about 6% higher. You have Indoco Remedies, 6.5% higher in trade. Dolphin Offshore. Then you also have stocks like RPP Infra, that's up by 6% varied sectors, select stocks that are buzzing in the broadest index, that's Nifty 500 basket. What catches your attention here, Vaishali?
So I guess, well, these are all bounces right now. Too early to say, but I think I would wait a
Okay.
while.
Okay, fair point.
Because,
Let's look.
see, we
Yeah,
spoke about it, and market is not holding on to the higher levels. There is
yeah.
fresh round of selling coming in, and today you see energy index beating up. So far, it was Reliance and all those stocks holding the market. Today, you see HDFC Bank, Reliance, all getting in the red. So I don't
Yes.
think it makes sense to really, go all out buying right now.
Absolutely, heavyweights and really not providing us that comfort at this point in time. And you now see 30 points higher in trade only, 22,160 for the Nifty at this point. But I think you began by talking about capital goods as your preferred sector of looking at certain stocks, Vaishali. You did talk about ABB and the likes. Siemens is something that I wanted to discuss. I missed discussing that with Vineet also. Jeffries came out with a report with a buy rating here and a target price of 7,215. But they are now looking at this demerger news of the energy division, and they believe that this should unlock value for investors, and they believe it's a good play on power transmission, having the highest capex growth within the subsegments as well. How would you really look at Siemens at this point?
So according to me, I think these are all very high, good quality stocks, and I think good corrective move has taken place. Even I'm looking at the weekly and the monthly chart and all. So well,
Yeah.
of course, in a case where we still see crazy selling, then I think we may see some more erosion coming in this. But technically, I would say 46, 4800 was a very good support. So if these levels are broken, then probably 4300 can be the next target level.
Hmm.
But this would be a good buying opportunity to my understanding.
Okay, fair point. Let's actually look at some other pockets then. Let's look at PFC and REC within the PSU pack. I mean, these are the two spaces that have got upgrades from brokerage houses today. Within the PAR space, do you continue to believe that these are the strong players that one can continue to bet on?
So right now they are all at a support level. So let's see whether they are holding the support or no. Because to my calculation, REC can drag down towards 330 levels. So that would be the level that I would be looking at. It's still not convincing that market is bottoming out, Sakshi. You'll have a look. I mean, it's deep red. So I
Hmm.
think some more pain is still left, and 330 would be the level in REC that I would look at.
Okay, fair point. Let's look at FNO. What's pinning down PB Fintech and Paytm, these new age tech stocks unable to perform, and they've been actually trading in the lower end in the last 1 week, 10 days order as well. PB Fintech, Paytm. What's your approach here now, Vaishali?
So I think Paytm, if we talk about, I think it has come towards a good support, 660, 680. I mean, today it saw a low of around 680. So I think this should be the opportunity. But if I were to look at a stock, I would currently look at Apollo Hospital.
Hmm.
Have a look at Apollo Hospital. Technically, 6,000 is a good support level. So I guess this is a safe haven compared to the other stocks already done with the corrective move. This could do well from here.
Okay, fair point. And in contrast, how would you look at the new age tech stock like a Zomato right now? That's been showing us some kind of a momentum on the positive side. It's inching back from its lows gradually. But today again, 1.2% loss, 220 odd levels. This has been a stock where we have talked a lot about. Where do you think are good accumulation levels for somebody really betting big on Zomato story unfolding over the next 3-5 years on back of Blinkit and then possible listing of Blinkit separately, and how those things could also unfold? How would you look at Zomato?
I think Zomato, technically, I would look at 190. It's already 220. We saw some time back going towards the 200 levels. So that would be acting as a good support, and I think it can be a hold. For now, it could be 200 to 240 as a trading range. Then we can have a relook.
Okay, fair point. Well, viewers, we have a large part of the market breadth that's now shifting towards the red. You have the autos that are up by 1%. You also have the IT pack that's actually stepping forward. When the banks are actually down, you have the IT actually coming up. You know, you have over 1% kind of an uptick coming in. Even if we look at the constituents that are on the winning side, you have Wipro that's 2% higher, Tech Mahindra 2% up, Infosys, HCL Tech, Emphasis, TCS, all of them showing us some strength. Vaishali, your picks as far as the IT pack is concerned, or do you think this is still a dead cat bounce?
I think it's a dead cat bounce. Sector on the whole can see some more correction.
Can see some more correction. But on the banking side, viewers notice that, you know, from the day's high, we are now down 390 odd points. So that's pulling down the markets. Even the mid caps, that's down over 600 points from the day's high already within the 20 minutes of trade. So you actually see a lot of weakness that's coming in for the Nifty. Fall from the day's high is about 80 odd points thus far. But it's the broader markets and the Nifty bank that are actually losing some ground. So keep an eye out on how the market momentum is shifting. It's a very, very volatile set of the market at this point in time. Let's actually look at some other pockets of concern. Let's look at some stocks then where we can look at. Okay, I want to also ask you on the capital markets related stocks then, Vaishali. Exchange stocks, BSE, MCX, they are also weakening in trade. How are you looking at those vis-a-vis the ones like CDSL or a K Fintech or maybe the broking related stocks? How are you navigating through the moves here?
See, the trend is down. So as I said, if overall market is still showing weakness, we
Hmm.
may see further erosion coming this. But talking about CDSL, I think a good corrective move has taken place. So if you get it at around 1,000 levels, it would be a good buying opportunity.
Hmm. Okay. Fair point as far as the brokerage related stocks and stock markets, capital markets focused stocks are concerned. The view there. Let's also look a little deeper to see where else can we find some momentum. Okay, within the PSU pack again, let's look at an HAL. 3121, a percent higher today. Anything that convinces you that the worst could be behind as far as the likes of HAL, BEL in the defense space is concerned, Vaishali?
So I think I maintain BEL. We have spoken about it quite a few times.
Yeah.
I think when I'm looking at the other stocks, this is still an outperformer,
Hmm.
and 240 acts as a very good support in BEL. So that is one stock that I would focus on at 240 levels once again for a re-entry.
Okay, fair point. So that's as far as the defense stocks are concerned. What about railways?
Well, we're seeing very good erosion. So I would look at Jupiter, Wagon, Texmaco Rail and all right now, but not in
Jupiter?
a
What
hurry.
about Jupiter?
Jupiter Wagons, 283.
Okay, okay. So that's as far as the defense and the railway PSU names are concerned. Looking at some of the other pockets, okay, let's talk about one of the erstwhile favorites within the retail pack, Trent. Again, there is no particular sign of complete reversal happening, but 48.34, does that give you any sense of a good sign of starting to accumulate for those who missed the previous rally, Vaishali? Do you think for somebody who's looking for the absolute long haul, Trent is something that will give you confidence to start nibbling in from the current levels?
4,500 would be the level to watch for.
Okay. Okay, 4,500 is what you should be looking at. In case of viewers who are looking at trend from a long-term perspective, you missed the last rally, look at 4,500 is what Vaishali's suggestion is as at this point in time. Okay, let's actually look at what's buzzing the markets. Let's do some stock spotting. So I think the Nifty IT is now 1.3% higher. The IT stocks are definitely contributing on the positive side. On the Nifty, when we look at the top contributors, Infi is contributing 27 points to the Nifty's gain today. Out of what, 60 odd points of a gain that we have, 27 points are getting contributed by Infosys alone. Then you have M&M that's contributing 15 odd points. L&T, ICICI Bank, Bharti Airtel is another one that we could discuss with Vaishali, and ITC. These are the two other stocks that are contributing on the higher side. What is keeping the lid on the upside? Reliance Industries. 40 points to the negative side as far as the Nifty is concerned from Reliance Industries today. It's now slipped further, 2.2% lower, 1173. I think this is the most important stock that we should be discussing now. Axis Bank, IndusInd Bank, Coal India, ONGC, these are all the other stocks that are contributing on the lower end. But this large part that you had pointed out, Vaishali, earlier, that Reliance is just not supporting the markets. It's slipped below 1200 mark. How much more downside? Remember, a lot of people actually got stuck in Reliance Industries when the bonus announcement had come in anticipation that things would start moving very strongly. As it is, in 2024, Reliance has given nil returns, and that's after a decade. But towards the fag end of 2024 is when the announcement came in of a bonus. People started to think that that could be a sign of a reversal coming in. Look at the sharp fall that we've actually seen in Reliance Industries. Don't consider the 61% because that's a bonus split kind of an impact. It's not that bad, but it's not given any return. About 3-4% of a downtick in 2024, and further continues to slip in the second month and now in the third month as well of the new year. 11% loss in the last 3 months is what we've already seen on this one. How much more downside, and is it the right time to start nibbling in Reliance Industries if somebody has a long-term view? Vaishali.
Well, so we are breaking the crucial support of 1180. That was the level that I was looking at. I think I won't be surprised if this goes towards 1980 levels. Look at the selling.
Yeah, 1092. That's what you expect on.
1980. This is the way it is showing right now. I would want to go wrong on this because on a bounce back, it should hold on at these levels. But if these levels break, then it's quite scary.
It is quite scary, and Vaishali believes that you could actually see, if the selling continues in this fashion, you could see a 3-digit on Reliance Industries, and that would trigger a lot of nerves, a lot of among investors as well. Reliance Industries right now at 1169, 2.5% loss. You can actually see pain continuing on the largest cap stock as far as the stock markets go in trade today. So that's where the pain is clearly emerging from. Any safe havens then, Vaishali, within the markets today? Do you think gold related stocks will offer some support?
I don't think so, Sakshi. I mean, I'm not at all in a mood to buy. Look at the market, it's pathetic right now. Even if I were to recommend, it's not going to last.
Absolutely, absolutely. It's a very, very painful set of the market, and there is nowhere to be seen where this selling will stop and where the reversal will start to come in, and whether investors should actually get the courage to buy more. I think that's the biggest question, Vaishali. I'm sure a lot of clients would be reaching out to you as well on our daily calls show also. A lot of viewers are asking, how much more do we continue to have the patience? They are out of any fresh funds. They were fully invested when the markets were at the peak, and they have actually seen all their portfolios turn into red, many of them down by 30, 40, 50% as well. And now they are scared. They want to put in fresh funds, looking at that there could be a reversal in sight, but where exactly, how do they go about it? That's the biggest question. How are you advising clients in this deep cut kind of a market right now, Vaishali?
So right now, I mean, we are not suggesting to buy. Well, for long term, as I started my today's talk, that yes, okay, one can start, looking at support levels, start accumulating, but there is no respite to this selling. I mean, we are just keeping quiet right now. Just hold on. Let markets show some signs of stability, sign of bottoming out. Because today, is all this while Bank Nifty was showing some ray of hope, it was outperforming. Today, the support levels are under threat. Imagine if Bank Nifty were to break
Yeah.
47,800. That's the previous support. I think there would be a chaos. I mean, that would lead to further selling going towards 36,000 levels in. Sorry, 46,000 levels in Bank Nifty. So
Wow.
I think we are in for good corrective move still.
We are in for some good corrective move even now, and the Nifty Bank is something which is actually a pain point today. Even on the Nifty, viewers, remember, we are inching closer to 20 to 100 at this point in time. 22,000 is at the risk itself, and in case we actually see 21,800 levels, Vaishali would clearly remember, those were the levels that we had seen when on June 4th, the election results, kind of a crash had come into the markets. So in case we breach that, then we are at the risk of giving up all those gains that we had garnered from June 4th onwards as well, as far as the markets go. So the Nifty is now in the red, 22,102. Vaishali, do you see a 21,800 kind of likely with this kind of a market sell-off happening and we giving up all those gains since June 4th? So we'd be at absolutely square one, not having made any return if somebody entered before June.
I'm fearing that. Let's hope that we go wrong. But look at Reliance.
Yeah.
Look at HDFC Bank. Look at SBI. So what do we rely on?
Absolutely. So Reliance Industries is actually breaking a lot of hearts at this point in time. IT and auto, those are the only two pockets that are holding up now, viewers, as far as the sectors go into the green. 0.5% uptick for the autos. IT just about 0.8% higher. India VIX is further seen some uptick, now 1.7% higher at 14.1. So the volatility has further heightened. You have 1.4% loss on the oil and gas index. PSU banks are down by 1.3%. Small and mid caps are down nearly 1%. Private banks are down 0.5%. Realty, pharma, financial services, metals and consumer durables that were showing us some, momentum. But just like how Vaishali had pointed out right in the initial part of our conversation, that there could be a dead cat bounce and we could see further sell-off, and that's how exactly it is playing out. 20 to 100, 20 points lower on the Nifty, and the Nifty Bank is to blame. Reliance Industries, of course, one of the biggest drags on the Nifty at this point in time, 2.3% lower in trade. And you're also looking at heavyweights like HDFC Bank within the banking space cracking in trade. So you have 2.6% lower on Reliance. You have IndusInd Bank that's down 3.5%. You have Axis Bank that's down 2%. You also have a lot of these names like Coal India that's down, ONGC. So oil and gas spaces are also showing us a lot of weakness. Even the PSU stocks have slipped now 0.5% lower in trade. Not looking good as far as the early morning trading action goes. Last word from you, Vaishali, before we let you go. The strategy for traders: stay away from this market completely?
Stay away, stay away, stay away, stay away.
Stay away from this market, let the market show us some signs of stability, and only then take any fresh entry at this point in time. Does not look very good as far as markets go. Thank you then, Vaishali, for being with us in the morning edition. I know it's a very, very difficult task for you in this current set of the market to really advise all the viewers in the right fashion when it comes to stocks, when it comes to strategies. But we will go through this together, and we will keep our hopes on that this too shall pass.
Yes,
as we have
absolutely.
seen. As we have seen many
This has
cycles.
to pass, yeah, of course. I mean, yes.
Yes.
All right. You have a wonderful day too. See you. Thanks.
Have a
Sakshi.
wonderful day, Vaishali. And we'll continue to focus on brighter things, and we'll continue to track the markets for you, since it's our job to really mark out each and every momentum for you throughout the course of the day. We'll be with you, viewers. Don't panic is what I would say at this point in time. This is a market cycle. Let it play its course, and things are bound to improve. How much longer will it take is something that we will not be able to say, but have patience, have faith. Do not act in panic. Do not stop your SIPs. Do not panic sell your positions at this point in time. This is not the time to really book losses, extravagant losses in your markets. And remember what Vineet also pointed out, tax loss harvesting could be something that will drag further broader markets as well. So that factor is also on the play, apart from the domestic and the external factors. Stay tuned with us. We'll continue to track the markets for you in daily calls. In case you have a lot of questions about the stocks that you have in your portfolios, join us on our daily calls show at 12 noon, where our top market experts will guide you on your stock specific coverage as well. Stay tuned.
First, we have a list of pardons and commutations relating to events that occurred on January 6th.
US President Donald Trump has unveiled a brand new immigration plan. It's being called the ultimate VIP ticket to US citizenship. A so-called gold card visa that grants a fast track to citizenship for a hefty price tag of $5 million. This new visa will replace the 35-year-old EB-5 investor visa created by Congress in 1990, which required immigrants to invest in job-creating businesses in the US.
We're going to be doing something else that's going to be very good. We're going to be